Welcome back to the deep dive. Today we've got a pile of sources, articles, notes, analyses, looking at a really significant strategic move. We're talking about the future of global business payments.
That's right, a really fundamental area.
And our mission today is, well, a deep dive into the launch of Coinbase Business. This isn't just a minor update.
No, not at all.
Coinbase is actually building out a stablecoin payments gateway, financial infrastructure, specifically for companies, global companies. And it's aimed squarely at a problem that, well, if you run any kind of global operation, you definitely know it.
Yeah.
The friction, the, frankly, ridiculous cost, and just how slow traditional cross-border payments are. 2 days, 5 days. It's crazy.
It really is. Lagging behind.
So Coinbase is signaling something big here.
Yeah.
Moving beyond just being a trading platform, they're pushing right into core operational finance. Okay, let's unpack this.
Yeah, and that framing is spot on because it looks like they want to own the business users, well, their operating account.
The operating account.
Exactly. So Coinbase is rolling out this new platform, and they're primarily targeting small and mid-sized firms, giving them one integrated place to manage treasury, earn yield, and crucially, send and receive USDC globally.
Right, and the features they've built in really show they get the pain points for finance teams trying to handle crypto. It's not just about complex wallet addresses this time.
Precisely. They're really focused on making that switch from traditional fiat banking as smooth as possible. So let's talk immediate utility.
Okay.
You get real global payout capability. A business can send USDC to any compatible crypto wallet. Sure, that's standard. But the real kicker for adoption might be sending payments via email. If you've got the email address, you can send the money.
That email bit is like the bridge, isn't it? But the part that probably makes a business owner really pay attention is the advantage with payment links.
Right.
Companies can create simple USDC payment options, put them on an invoice, maybe a checkout page, and bam. 2 things traditional finance struggles with. Instant settlement.
Almost instant, yeah. Fast.
Fast settlement, and this is huge. No chargeback.
Yet a massive, massive benefit. I mean, think about an online seller losing, what, 3% to 5% maybe to charge back fraud and fees?
Right, and waiting days for the money.
Exactly, and then waiting a week for settlement. With Coinbase Business, theoretically, they get the funds super fast, and that risk of the payment being reversed just, poof, basically gone because it's final on the blockchain. That's a serious improvement to cash flow.
Huge. And to make it feel less like crypto weirdness and more like normal finance,
Yeah.
the integration part seems pretty smart.
Yeah, they didn't try to reinvent accounting software.
Good.
This platform plugs right into established systems like QuickBooks Zero. Plus, they've got crypto tax tools built in. That connection to the existing regulated financial backend, that's, I think, key for getting businesses on board.
Right, makes it feel familiar on the back end.
Right.
Reduces that big hurdle, that sort of behavioral friction you always see with Web3 adoption.
Exactly.
But the immediate hook, the shiny object to get companies to actually move funds over, that's the yield feature, isn't it?
Oh, absolutely. They're offering currently around 4.1% APY on USDC balances.
Wow.
And you can cash out easily to linked bank accounts. Getting that kind of yield on your stable operating cash, that's tough for a traditional bank to match right now, especially in a, standard deposit account.
Okay, let's pause on that yield because it seems really central to the whole strategy.
It absolutely is. When you look at the sources, they point to this critical financial engine behind it all. Coinbase has a revenue deal with Circle, right? The company that issues USDC.
Right.
Coinbase gets roughly a 50% cut of the interest generated by the reserves backing USDC. So every single dollar a business parks on Coinbase Business, earning that 4.1%. It doesn't just help the business.
It helps Coinbase too.
Directly. It boosts Coinbase's bottom line by growing the total amount of USDC being used and held on their platform, on their rail.
Okay, so this isn't just about collecting trading fees anymore. This is structural. They want to increase their interest-earning assets under management. That makes sense. That's why it's a strategic pivot.
Exactly right. And that's where we shift to the bigger picture, the strategic significance. If we connect this up, this platform positions Coinbase not just as an exchange or a place to hold crypto,
Right.
but as a full-blown crypto operating account, a financial hub for businesses. It becomes the center for their treasury, their transactions.
It dramatically increases what people call stickiness, right? For listeners maybe less familiar, stickiness just means how hard it is or how reluctant a user is to leave a platform.
Yeah.
So if a business is getting a better yield on its cash and they could use that cash instantly for global payments without swapping back to fiat, well, it's a pretty powerful reason to keep the USDC right there in the Coinbase ecosystem.
A very powerful incentive. And by doing this, they suddenly find themselves competing in two different arenas at once.
Okay, who are they up against?
Well, first, they're challenging those modern fintechs focused on business banking. The Bruxes and Mercuries of the world.
Right, the neobanks for business.
Exactly. And second, they're competing with existing crypto payment folks like BitPay or OpenNode. But Coinbase is offering something much more integrated, more treasury-focused, plus that really critical yield component.
So are they basically trying to become a bank, just using crypto rails?
Maybe more like trying to become the infrastructure under the bank. This pushes the whole Web3 narrative forward quite a bit because it starts to blur that line between, decentralized on-chain money and traditional business operations.
Okay.
It really reinforces stablecoins as actual money rails, essential plumbing for global commerce, not just some asset you trade. If big businesses start routing daily payments through tools like this, well, that drives huge network effects, deeper liquidity. It validates crypto as real backbone stuff.
Okay, so let's zero in on the direct upsides for the businesses themselves. We mentioned speed, yield, no chargebacks. What about actual cost savings? How tangible is that?
Potentially substantial savings compared to the old ways. Think about a common case. A medium-sized company sends, say, a $20,000 wire transfer overseas.
Yep.
That might cost them, $25? Maybe $45 in fees, plus hidden correspondent bank fees. And then there's the time cost, waiting 3, 4, 5 days.
Right.
Sending that same payment using a stablecoin rail like Coinbase Business, it's almost instant, and a cost drops to fractions of a penny in network fees, plus whatever small fee Coinbase charges. Multiply that difference across thousands of payments. It's enormous.
That's the pitch, the dream scenario. But, okay, we have to talk about the challenges, the friction points. This isn't risk-free. Let's start with the non-tech hurdles. What are the big ones?
The first, and probably the biggest, is regulation and compliance. For Coinbase to operate this truly globally, they have to navigate this incredibly complex patchwork of money transmission licenses, different rules everywhere, plus strict Know Your Customer, KYC, and anti-money laundering AML checks in dozens of countries. It's a constant expensive grind to get and keep that operational status without accidentally becoming regulated like a full bank everywhere.
Okay, regulation is number one. Then you have the risks baked into the technology itself, right? Even with a stable asset like USDC. What does that mean for a business user?
Yeah, you can't ignore those. A business using this faces several key risks. First, there's counterparty risk. The risk that Coinbase itself, the company holding your funds, could face financial trouble or regulatory issues.
Right, platform risk.
Then there's custody risk.
Wow.
Who actually controls the private keys to the funds? If the platform goes down, can the business get its money back easily? And of course, smart contract risk. There's always a chance, however small, of a bug or an exploit in the underlying code that governs the stablecoin or the platform.
And even though USDC aims for stability, there's still market risk, isn't there? We saw some wobbles and liquidity issues in stablecoins during stressful market periods before.
Absolutely, that's always there. But maybe the single biggest hurdle is still that adoption friction we touched on. Convincing established businesses, especially older ones with legacy systems.
Yeah, getting them to change.
Yeah.
Getting them to migrate away from the banking systems they've used for decades. That's a massive behavioral and operational shift. Even if you're offering 4.1% yield and no chargebacks, it takes time.
We already mentioned the core financial driver for Coinbase, that Circle revenue share agreement.
Right.
Makes growing USDC balances directly profitable for them. And they're also consolidating their existing products, right? Tidying things up.
Yes, that's another piece. There's a clear plan, it seems, to fold their existing merchant checkout product, Coinbase Commerce, which is more decentralized, into this new unified business platform.
Oh.
And that unification is important. It takes those separate payment acceptance tools and combines them properly with treasury management, yield generation, trying to create a one-stop shop for businesses using crypto.
Makes sense. So if you're, say, an investor watching this space, or maybe a developer, a builder,
Yeah.
what are the key takeaways? What should you be tracking? Well, for builders, I think the message is this is becoming the new payment layer. If you're building APIs for e-commerce, for SaaS tools, supply chain platforms, you probably need to think about integrating with the Coinbase Business API. You want to be part of this emerging rail.
Get ahead of the curve. And for investors?
For investors, it really comes down to watching adoption rates. How many businesses are actually moving real operational payments, vendor payments, payroll maybe, onto USDC? And specifically, what's the total dollar volume flowing through this new payment system?
Right.
If stablecoin demand is really going to grow in a sustainable way, it has to come from this kind of utility, not just speculation or trading.
So this whole launch, this whole platform,
Yeah.
it feels like a massive bet on where money is going. Let's try to recap the main takeaway here. Coinbase is basically betting that stablecoins are the next fundamental infrastructure for global business,
Yeah, that's the bet.
potentially making traditional banking look slow, expensive, kind of like a backup option eventually.
JD.
Which leads us to a direct question for you, the listener. If you run a business and you weigh up everything we just discussed, the benefits, the risks, would you rather earn that, say, 4.1% yield on your operating cash in stablecoin with instant, cheap global access, or keep it in fiat in a traditional bank?
It's becoming a real choice.
That trade-off is getting sharper faster.
And that leads right into the final, maybe provocative thought we want to leave you with today. What happens if businesses globally do start routing the bulk of their payments? Vendors, payroll, supply chain, through stablecoins like USDC. What if fiat rails really do become just the backup? What does that kind of fundamental shift mean for the global power structure of money? For the central banks who currently sit at the top of that structure?
It's a huge question, a really huge question, and the answer is unfolding right now, isn't it?
It really is.
And look, if you found this deep dive useful, if you appreciate this kind of focus analysis, please take a quick second to engage with us. Subscribing, leaving a comment, maybe sharing this with someone who'd find it interesting. It genuinely helps support these deep dives.
It really does. Helps with visibility, lets us keep doing this.
Yeah, boosts us in the algorithm,
Yeah.
lets us keep making this kind of independent crypto content for you. We really appreciate you diving deep with us today.
Thanks for tuning in.
We'll see you next time.